Well, thus far, we do understand it's going to be listing on the New York Stock Exchange under the ticker RDDT for Reddit Inc. And as you say, it's the S1 filing we've all been bracing ourselves for. Ultimately, they've been disclosing that they still are loss-making. $90.8 million was their loss in 2023. 2022 was a net loss of $158 million, though. So clearly they're managing to squeeze that loss. That's why of late we've been hearing of the deals that they've been securing. Remember, there was that recent reporting that for $60 million a year, they're going to be allowing Google to mine some of Reddit's overall data to be able to train some of the AI models that have been used in Gemini. Now, could that be repeated by other companies? Could we see yet other large language models like OpenAI be licensing from Reddit? And could that be a real revenue generator? They have been improving their revenue, in fact. We have seen revenue tick up about 20% year on year versus 2022 to 2023. That's what we understood before this IPO was indeed made public. And remember the banks behind it who are going to be finally a little bit more upbeat about potentially this IPO window opening again. Morgan Stanley, Goldman, JP Morgan, Bank of America, some of those that are leading it.
Right. They certainly have brought together the whole cast of characters for this IPO in terms of banks. Interestingly, also, Reddit headlines, more coming out. Top 10 customers accounted for 26% of revenue in 2023. And a risk factor here in the S1 filing here, Caroline, is that they have a history of net losses and may not be able to achieve or maintain profitability in the future. Does the market have an appetite right now to digest companies with that type of concentration risk and losses?
Well, no, it's what many would have said. But ultimately, this is a company that's having to do quite a major down round, if that's the sort of language you're going to use. Remember, this is a company that was valued at $10 billion. They've been advised, we understand, according to people familiar, that it would be about $5 billion in ultimate valuations at the moment. So I do think that what we're seeing at the moment is this narrative that companies do need to be focused on making a profit eventually, do need to show revenue growth at the moment. Perhaps it is a growth at no longer at all costs. It does need to be profitability shown, and that's what we saw with ARM, that's what we saw with Klaviyo, and that's why the IPO window kind of slammed shut a little bit towards the end of last year.